welcome everyone. Thanks for spending some of your afternoon talking about GASB87. My name is Stephen Jarvis and I'm a director with Clifton Larson Allen. I've got Mandy and Lance here with me today. We're going to spend some time talking about leases. Just a little bit about our firm. So Clifton Larson Allen, or CLA, is a nationwide CPA firm. A couple of things about us that make us stand out a little bit. We do more single audits than any other firm in the country. So this is something that we spend a lot of time on the compliance side of things. Over 50 of those clients are housing related. And while we do cover the entire country, we have 13 offices in Washington, Idaho, and Oregon. And I'm based in our Spokane, Washington office. So I actually grew up in on the west side of the state near Seattle, and I've called Spokane home for about 10 years now. So then I think next we have our required disclaimers. Just remind everyone that this should not be taken as official legal or accounting advice. We are trying to share as much information as we can, but if you have specific questions to your situation, please reach out and have those conversations. There's a lot to learn here today, but this won't hold up in court, I think is the point of this disclaimer. So now that we have that out of the way, we can dive into some more of the fun. Just so we get kind of an idea of who we have here today, and to make sure you all know where the chat function is, can we go ahead and have people start putting in the chat function who you are, and I guess maybe what housing authority you're with and what your role there is. Give just a minute to kind of see who we have here. Welcome, Lori. Thanks for joining. Kala from Everett, Daniel, Bellingham, Whatcom County. Now they're popping up really fast. I'm not going to get all of them, but we really appreciate everyone being here. Al, thanks for being here. Oh, the last one. Funny. Oh. Got some background noise. Unless you're trying to ask a question, if you could mute your line, we'd appreciate it. All right, yeah, so it looks like we have a pretty wide variety of organizations represented today. So the other question we're going to ask is how many years you've worked at your housing authority? 1.5 years, 4 years, 6 months, 7 years, 1.1 years. We have an accountant on the line. 18 years, 4.5. Awesome. This is great. 25 years. Wow, I should be asking you guys the questions. Mandy, am I the only one seeing your doodle art on the screen, or is that for everyone's benefit?
I'm not doing that. I think PNRC is.
Oh, perfect. I didn't even know that was an option. That's great. Oh, 10 months. I think that hits the newest. Oh, no, there's a 6 months earlier. All right, well, we certainly have a wide variety of organizations represented, a wide variety of experience represented. The good news is, well, good news, this is a new accounting standard, so this is going to be a fun adventure for all of us, regardless if we're 6 months in or 25 years in. So what we're trying to talk about today, we're going to start high level on what GASB87 is, what it means for all of us. We're going to talk about some definitions, some important things to know as we head into this new accounting standard. We'll talk about the timeline for when this is applicable and when you should start working on it. Hence, the answer is now. And then we'll get into some more of the details and go through some examples, try to make this as applicable as possible. So you can go ahead and move the, thanks, Mandy. Okay, so for just a little bit of background, you know, why change an accounting standard? There are several reasons cited by GASB. In the standard itself, pretty much the first reason it lists is, well, the old standard's been there for a really long time, so why not have a new one? But really trying to get to identifying right to use as opposed to just a general idea of leases that we've historically had. We're trying to get to, okay, what are my contractual rights? What are my future liabilities? We're trying to improve disclosures. We're trying to improve the usefulness of the financial information to the users of the financial statements. And we're trying to get consistency across industries, jurisdictions, organizations. really some of the key points for this standard coming about. I think on the next slide, we're going to go through the timeline of how this has kind of evolved. So GASB87 was originally released back in 2017, which I know we were just all excited right out of the gate. Then in May of this year, GASB95 came out and delayed the implementation date for this standard. So as of right now, GASB87 becomes effective for reporting periods beginning after June 15th, 2021. So for most of us, that's going to mean our fiscal 2022 year end. Now, that might, if we talk about the fiscal year end of 2022, that might sound like a long ways off, but there's a lot of work that's going to go into this. And depending on what you use for comparative periods, your fiscal 2021 might be really important for how this all gets reported and disclosed. So please do not take the effective date as the date that you can start thinking about this. So oh, I think that was backward. There we go. Thanks, Mandy. So let's go through some of the definitions. And I'm going to try to keep this as applicable as possible, but it does get a little bit wordy because there are some really important nuances to some of the language in this standard, like any accounting standard. So GASB87 is going to change the definition of what gets recorded as a lease and how those get recorded. And we're going to go through a flow chart. We're going to go through a flow chart on the next slide that I would recommend you all print out and laminate and keep on your desks to kind of illustrate how this works. But in general, we're always going to start with, okay, there's got to be some kind of agreement in place. And it says contract/lease because we really want to reinforce that you cannot just think about this in terms of traditional leases. It's not as easy as saying, okay, is the word lease included in here? We've got to dig deeper than that because there are going to be a lot of things under this standard that historically we did not think of as leases that we have to now. So, but we're going to need to have some kind of agreement, and then there has to be an asset. There has to be a non-financial asset involved, or we do not have a lease. And that's going to be the first step in our flow chart on the next slide. That's where we're going to start every time. Is there some sort of non-financial asset involved? And then this topic of control comes up a lot. This is going to be a key definition as to whether or not you have a lease. And so control has two key components to it. It's that you have the right to the present service capacity. You get to use that financial asset, or that non-financial asset. Just making sure you're all listening. That you have the right to use the capacity of that non-financial asset, and that you get to determine the manner of the use. So that's how we distinguish what control is. So then the next key piece is the lease term. And this is where we're going to get just a little bit wordy for a second, but again, it's important. That your lease term starts with any non-cancelable lease period defined in the contract or the agreement. But it can also include options to extend if it's reasonably likely that you would extend, or it can include periods where you have the option to terminate if it's reasonably likely that you wouldn't terminate the lease. And that's both from the lessee and lessor standpoint. So there is some subjectivity in here. It's not all going to just be cut and dry. And part of the reason they did this is so that everyone doesn't just run out and structure all of their leases as 3-month leases with indefinite extension periods. So GASB wanted to stay true to the words escaping me. They want to stay true to not. Don't want to get hung up on the letter of the law. They want to go with, okay, what's the intent here? And then the last piece is that there's got to be an exchange or an exchange-like transaction, an exchange of equal value. And the only thing I'll mention on this is partially in here to exclude leases that are done in more of a donation or contribution format, that it's you pay $1 for the use of the land or whatever it might be. There has to be an exchange of value for there to be a lease. So those are key definitions that we need to know as we evaluate our contracts for whether or not we have a lease. This standard introduces 3 different categories of leases. The first is short-term leases, and that is a lease that has term or time period of less than 12 months. And that includes both that non-cancelable period and then any of those option periods to extend if we think they're reasonably likely. And that's important because if the lease is less than 12 months, it's excluded from this standard and we don't have to evaluate it and we don't have to go through this process. So those are short-term leases and they're excluded. Contracts that transfer ownership. So these can sometimes be structured like leases, but as a component of that contract, the non-financial asset is ultimately going to be transferred to the lessee. And that essentially gets treated as a finance sale. And so it also is excluded from this standard. So those are going to be our agreements that we can just cut out right out of the gate. And then pretty much everything else is going to be a long-term lease. These are the contracts, the agreements that we're looking for that we're going to apply these standards to. All right, Mandy, let's go on to the next one. This magical flow chart I keep mentioning. So like I said, please print this out. Please keep this. Please refer to this often because this is going to help us as we get started looking at agreements to say, okay, do we have a lease? Do I need to consider GASB87? And you're going to need to go through this or work with someone to go through this on all of your leases and contracts. You're going to start at the top with, okay, is there a non-financial asset involved? Yes or no? And then either we move on or it's not a lease and we're done. And then the next step is explicit identification versus implicit identification. And we'll talk in just a minute about embedded leases. But there are going to be situations, particularly with service contracts, where again, it might not be called a lease agreement, but there could be an underlying lease. And then then we get to our control test that I talked about, the present service capacity and the ability to determine the manner of use. And then we get to, okay, do we have a lease or not? So on the next slide, we'll go through just a few areas that are excluded from the standard. So we broadly talked about non-financial assets, but there are some things that would be considered non-financial assets that are still excluded from GASB87 because they're covered by other standards. Biological assets, conduit debt, inventory, intangible assets, supply contracts. You can see them there on the slide, but there are things that it's not that you just get to ignore them, you just need to go to a different standard to evaluate how to account for them. But we won't focus on them today. Okay, application of materiality. So this is another area where there's going to be subjectivity and judgment involved. That doesn't mean you can just decide anything you want, but this might be a good time to reevaluate what you use internally for your materiality when it comes to capitalization in general, because that is a good rule of thumb for leases is, okay, what do we use for our capital asset capitalization thresholds? And it's important to note that similar to how you should be applying materiality to capital assets, you can't just look at the leases individually. There are going to be situations where you need to look at them in the aggregate as well. So if you're leasing 3 dozen of the same type of asset and they're individually immaterial, you still need to consider if in total or in the aggregate those are material and should be considered under this standard. Okay, so back to our chat participation. So does a contract which allows the lessor to replace the underlying asset with an identical asset or substantive substitution right affect the application of GASB87? In other words, if the lessor can replace the asset you leased with another identical asset, does it change how we apply this standard? Daniel, right out of the gate with a no. Anyone contradict Daniel? That's probably smart. No, it does not. Under the new standard, we're really focused on right to use. So it's not necessarily contingent on a specific asset, but the right to use another entity's assets. Okay. And so then as promised, we're going to talk a little bit about what we call embedded leases. So this is really applicable to service contracts. And so we have a whole list here of potential service contracts that traditionally, soda fountains is a common example of you sign these agreements, and really in the agreement, the price you're paying and a lot of the terms are focused around how often that gets refilled and serviced, and who's responsible for all of those kinds of things. And there's really no mention of the soda machine itself. Same with copiers at times, coffee machines, a lot of other assets that we use. And in the past, those are just excluded, or we wouldn't have even thought of those as leases. Under GASB 87, those can be leases that we need to go in and evaluate, okay, how much of that price is really assigned to the underlying asset, and then how do we account for that? And so this is just kind of another, should be kind of a triggering moment of, okay, this is going to take some work, because not only do you need to go through all of the leases that you've always thought of as leases and see how you need to account for them differently, there's a good chance that within your organization, there are contracts that the accounting and finance team might not even manage or handle that also need to be evaluated. And so as you start into this process, you want to work with your accounting and finance team, you want to work with your legal team, you want to work with your operations team to make sure that you're really identifying all of the contracts the organizations that entered into. And going a step further than that, you also want to do things like review your GL activity and look for consistent monthly payments that might indicate that you have a contractual obligation out there, that maybe you need to find that document and evaluate whether there is a lease or an embedded lease in there. So there are there's a lot that goes into this, and we'll keep trying to reinforce that, because we want to scare you so that we start thinking about this now, because as we sit here on August 31st, 2020, we still have lots of time, but we're going to want to use that time effectively. So there's a high-level introduction. Hopefully some of that isn't new information. This has been around for a little while. But we're going to go ahead from here, and I'm going to turn it over to Mandy, and we're going to get into some more of the details here.
All right. Thank you, Stephen. All right, everyone. So just a couple things too. If anyone has any questions, Lance, me, and Stephen are all monitoring the chat. So feel free to post anything. If you have specific leases or anything that you want to talk about, start putting it in there. We do later on this presentation have 5 examples that we're going to talk through. So if you are sitting there being like, gosh, I really want to know how to handle this lease that I have at my agency, go ahead, write it up in the chat and we'll talk about it. We can talk about it part of that. We want this to be as interactive as possible. These first, 45 minutes are going to be a lot of information, but then the last kind of half hour, we really want to dive into the details and talk you through it all. So I'll keep looking at that chat for things to come through. All right, so just to kind of circle back on a couple of things that Stephen said, back before COVID, back in February, I did a big lease training out in California with a GASB individual. And I think the biggest thing before we kind of talk about the lease term is just remembering you must make sure any of these contracts or leases have an asset identified first. Don't jump to a lease term and start going through all this, understanding the lease term and what should possibly be the lease period and how long you should be, looking at it for. If you can't find the asset and then you don't have the control, you don't even get to this point. So make sure that is the first thing that you really consider and look into. It makes it a lot easier when you're going through this process, when you start looking at your leases and then looking into your general ledger to see what you have. Okay, so first up, the lease term. What is the easiest thing to remember about this lease term, and we do have an example about this later, is just considering, what is the consideration of the, the present value and the amortization, what is that lease term that you're going to use? So the lease term is the period during which a lessee has a non-cancelable right to use an underlying asset, plus the following periods. And what is key about that is that the lessee has a non-cancelable period. If at any point, where I have at the bottom here, the exclusion of cancelable periods, whenever you have a lessee and lessor both have the option to terminate at any point in the lease, you're done. It does not qualify under GASB 87. So you're saying to yourself, why don't I recommend that all of our leases are written this way so we don't have to do GASB 87? Well, what I've heard, it's not a good selling point to vendors to not have some sort of a lease term. But that is just one thing to keep in mind. So as you kind of walk through here, you can see when you're determining that lease term, you consider these other periods also. And the other big considerations you want to use in here is the reasonably certain. So when you start looking at these options, so if you have a 3-year lease and it has an option, you just don't automatically say, okay, well, I'm going to, present value this by 3 years. You have to consider the options. Like, is there some sort of likelihood that you might exercise an option? And if you are, you should possibly do 4 years, possibly do 5 years. So that is something that should be considered. So all these are kind of examples of, as you're going through these leases and you're determining the lease term, that are important to consider. The last bullet on here, what I like to emphasize is the reassessment of the lease term. So if there is some sort of material change, or you're in a building lease and you have a 5-year, and then all of a sudden at year 2 you decide to negotiate out to 10 because you're going to get a better rate, that would have an adjustment to your calculation. It would adjust the net present value and the liability recorded. So all that kind of stuff would come into in consideration. So again, lease term, very important to kind of read through it. You definitely have to get into the leases. What I've seen, I've been through probably about 50 leases kind of going through this myself. These are kind of buried. So kind of looking at these, and they're very legalese. So as Stephen mentioned before, it is very important as you kind of get into this and start seeing this, you might have your contract people revisit some of this, and your legal people revisit some of the ways that they're writing up these contracts. So, okay, so let me see. Next slide. Okay, so as I mentioned, just a couple questions for everyone. So kind of gave this one away, but 5-year lease with lessee option to extend for another 2 years. Lessee is reasonable certain they will extend 1 year. So if you want to put in the chat, based on those considerations, that information, how many years should the lease term be? Who's going to be first? Yay, Cece, 6 is right. Good job. Okay, all right, the next one. All right, we got a 10-year lease with lessee and lessor having the option to cancel after year 3. What would be the lease term for this one? 7 is not correct. You have the lessor and lessee both can cancel after 3. So yes, it would just be the 3. So once you have that, that would cancel out the rest of the years. And then this last one, which is very interesting, and we'll get the answer first, and then I'll walk through it. A 2-year lease with the lessee and lessor having the option to cancel within 60-day notice. Correct, that's a no lease. So I found this recently at a housing authority, and this was in on their affordable side. I don't know if any of you have this, but they had it kind of in one of their mixed finance. They had some affordable units mixed in with the public housing units, and they had some 2-year leases. So obviously we caught it actually earlier this year, and so they're going to work on doing that, but they had 2-year leases for those units locked in. Very, very strangely worded leases, but I never would have expected that, because if you all remember when, IFRS and, when FASB all came out, the big thing was we all thought probably 5-7 years ago that the impact this was going to have on the public housing authorities was going to be huge, until they put in anything under a year or cancelable, month by month. But keep an eye on that. Hopefully that was just a one-off, but that was something that I saw happen at another housing authority with the affordable side. So, okay, all right, got some more questions for you. Don't worry. Oh, I'm sorry. Okay. All right. So a lease contract allows either party to cancel the lease at any time, but also provides for cancellation penalties. Are the cancel periods excluded from the lease term? So that is Yes, this would be. So people got a little thrown off by these cancelable periods, thinking that if it had a cancelable period that you would have a lease. But because you don't even look at that, because both the lessee and lessor have the option to terminate without permission, then it is excluded, and it wouldn't be included in the termination of the lease period. Same thing if you're just looking at the lease, you know, in general, considering this also, if there was any kind of cancellation penalties for the overall lease. Okay, let me see. I got some more in here for you guys. I think the best way is to learn this is lots of questions. Okay, a lease contract allows only the lessee to cancel the lease at any time, but also provides for cancellation penalties. Are the cancel periods excluded from the lease term? Okay, so this one's a little bit different because this is just a reminder. Periods covered by either lessor's option to terminate the lease be included in the lease term if it is reasonably certain, based on relevant factors, that the lessee or lessor will not exercise the option. So again, because the lessee is the only one that can cancel, at this point it comes down reasonably certain. Okay, so keep that in mind when you're going through, if you're, you know, on the lessor side and then on the lessee side. I hope that makes sense. Okay. All right, so I think the most interesting part, or the hardest part of this standard, is the discount rate. I think it's pretty easy. We only have one slide on it because it's pretty straightforward, but some places it gets a little complicated. But I think the easiest way to think of this discount rate, you know, for lessee, lessor, is just, you know, what is your incremental borrowing rates? Because you might find, unless it's explicitly stated in the lease, and we'll talk about a little bit later, I'm thinking about some of these ground leases and possibly the cell tower leases, like other stuff that possibly might not have a discount rate listed. Even some of the building leases, I've seen some that didn't have a rate. It just kind of gives you payment terms, just to consider. So this is kind of a rule of thumb. So lessee interest rate charged by lessor, obviously that's the most easiest way to do it, or then the lessee's incremental borrowing rate. So pretty straightforward there. And then again, the discount rate should only be reassessed in the following instances. So really the lessee is upon a change in the lease term, or a change in the termination of whether the lessee is reasonably certain to exercise the purchase option. So keep that in mind. And then the same thing with lessor, just if there's a change in the lease term or change in interest rates charged to the lessee. So this is the big number. When you think about it, it's going to impact that present value, and it's going to impact that liability you put in your book. So it might just be like, but you know, that is going to have an impact to your, you know, kind of your bottom line, depending on which side you're on when it's reflected in the financial statements. So, okay. All right, so I'm gonna hit on this quickly. I don't foresee this being too much in the public housing realm, with kind of separating lease and non-lease components. I think the best example is the one that we kind of have in the top one is, you know, you're going to see some of these leases, especially like when you're getting into the copiers, and as he says here, like maintenance and stuff, where they're going to charge a fixed fee for some stuff. They're going to charge variable rates for other stuff. And you're going to look at it and you're going to realize, oh, there's all these assets involved. So how do we start splitting this out? And this is just basically kind of walking you through the kind of process to consider is to, when you look at that lease and determine what's involved. So for example, the copier, if the copier rental and lease is also going to include, you know, the toner cartridges or paper, which we wish, but something like that, something that would kind of be part of it, is that needs to be kind of broken out separately and determine then if there should be an allocation based on what should be capitalized. So you just wouldn't have, you would have separate components as part of the lease. So, excuse me, separate assets that would be disclosed versus just one big asset. So that is something. But again, just looking back when I was kind of thinking about this the past couple of days, I was like, I don't really see this unless anyone else knows anything. It has an example of this. Send me a private message. Okay. All right. So business areas of impact. Stephen kind of mentioned a couple of these before, but this is going to be very interesting as we all go through this process. I don't know, anyone in the chat, let me know, has anyone started this process at all or done anything related to GASB87? Maybe you started it and then because of COVID and GASB95 put it on the back burner. But I've started with a couple agencies and, we basically did see the amount of time this was going to take and the number of kind of business activities was kind of going to impact. And when I say that, I don't mean business activities in relationship to public housing authorities, but internally. So your procurement department, your finance department, legal department. I highly recommend, and really it's kind of almost a requirement, is that you're going to be implementing some kind of financial and accounting policies. So kind of like right now, how you have your capital asset, your capitalization policy, you're going to have something very similar for the leases. Because there is going to be some, just making decisions based on this. As Stephen said earlier about materiality, like what are your considerations and assumptions and how you worked through your business and determine, okay, we might have these over here, but they're all immaterial, so we're kicking them out because of this. So all that kind of stuff, just like procurement policy and capital assets, you are going to want to document how that's being done. It also might impact your contract negotiations, kind of what I alluded to earlier. Depending on what you might find as you go through this process. Two things. You might find out, this is a horrible thing to monitor from an accounting standpoint. But the other thing is you might start listing all this stuff out and say, hey, I'm getting a better rate or a better contract lease with this other vendor. So it could be some other things you're going to kind of come out of here and see as you're kind of going through. And definitely with that, the contract negotiations might be a little bit different. Budgeting, governmental fund accounting, there's not as much impact because a lot of this is a revenue and expense that impacts the balance sheet, or excuse me, the income statement. But you are, from a budgeting standpoint, if you are looking at your assets and liabilities, you are going to see obviously this new number appear that's going to be there. So it might be something for you to consider. The financial and IT systems. We will talk about this later at the end. This is very huge. Maintaining all this information depending on the size of your agency and the number of leases you have. The rule of thumb that we've been kind of telling clients, and when I've been to trainings and stuff, is that if you got more than 10 to 20, you really should be considering some sort of a software. The Excel format is, if you have somebody internally that's really good with Excel and can really develop these schedules, amortization schedules, and keep them updated year after year. A lot of these leases, especially for housing authorities, you're talking about land leases and other stuff like that. They're 50, 100 years depending on materiality. But it's just something to consider. We'll talk about that a little bit later. Internal controls, is there any kind of change in internal controls? And then obviously just kind of key metrics. Is this going to kind of impact in your metrics and from the business area of impact? So let me see, I had some, okay, I see some people, I'm not going to say their name, but somebody cringed. Somebody postponed it. And then somebody's going to do it ASAP. Okay, perfect. All right. So at least we're thinking about it. We have some people thinking about it out there. So, all right. So, okay. So we're going to go through some actual examples on this, but just wanted to kind of put it in writing before. I feel like I'm one of those people that really has to see it in action. I did so many trainings on GASB87 internally. I felt like for a year as we prepare as an accounting firm to launch this to our clients, and it wasn't until I actually put the pen, well, let's be serious, my computer and into an Excel spreadsheet and started going through the T accounts and my debits and credits that I really started understanding it and really comprehending it. So let's just go through it. So the lessee. So the lessee, obviously, we are going to be recording an intangible lease asset or right to use asset. The initial measurement of the lease liability. So, that is going to be, based on the prepayments, any kind of indirect costs, lessening lease incentives received from the lessor at or before the commencement of the lease term. We do have an example with this. Hopefully that won't be impacting any of the housing authorities, but you never know. Just when I think I've seen it all, I see something new. You guys keep us on our toes. And then the lease liability. So you got the present value, the future lease payments for the lease term. So basically, when this is recorded, it's an asset and a liability, just straight out. They equal each other. It's not until subsequently when you start recognizing the lease liability is recognized by the P&I coming in. So just like a normal liability, as the principal and interest come in, you apply that against it. And then the intangible lease asset is then amortized. So just like, a capital asset, they don't call it depreciation, they call it amortization. So that'll be amortized. So that's when after the initial year, they're not the same amount. So you think of it that way, depending on how long the lease liability is, how long the lease asset is, that's where if you kind of think about it, what's hitting my, my P&L. So you got the expense. Actually, you got expense on both sides. So you don't get any revenue on the lessee side. So you're going to see that amortization expense and the interest expense hitting the P&L. So if you're thinking it from a budgeting standpoint and how is this going to impact me, think of it that way for the lessee. If you just saw that, I just did the T accounts in my brain. So you're welcome. Okay, so the next part would be the lessor then. So the lessor is a little bit easier. It's a lot easier. GASB did not spend much time on it if you go through all the 87, all the implementation guides. But again, the lease receivable, present value of those future payments coming in the door. Remember, we do not change that asset you have in the books. So it will seem weird, maybe dirty in accounting that you have an asset on the books, but we're used to in the Public Housing Authority. If any of you have ground leases out there right now and you've recorded some prepaid ground leases, you already have a receivable and land on the books. And then this is where we have the deferred inflows. So again, you will have that debit to that lease receivable and a credit to that deferred inflows. All right, so then again, the lease receivable will be liquidated based on the future payments coming in. All right, so you can visualize that. And then the deferred inflows is then going to be amortized. And as it's laid out, and I always have to read this, laid out in GASB, recognize the revenue in a systematic and rational manner over the lease term. So doesn't say, you can do some sort of, interest rate if you wanted to amortize it, or you can just do good old fashioned straight line. So that's up to you how much pain you want to cause yourself, but I would recommend straight line. Couple other things, let me see. One other thing I want to note here, because I didn't really put a slide for it anywhere, is in the event you have a sublease, if you're subleasing any of this out, you wouldn't do any netting. So if you were leasing, if you leased something and then you turned around and leased out, or vice versa, you would record that also. So keep that in mind. The only time you would start having some eliminations would be if you were, leasing to internally or to like a blended component unit. So if you had some sort of land on the, authorities books that's recorded in, in the AMP or COCC, wherever you have it, and you turn around and you're releasing that out to one of your BCUs, that's when you would have an elimination that would occur. I have a bullet point later about the DPCUs. We'll talk about that later, but I think that's going to get real dirty and real ugly later. But we have some time for them to figure out that going on. But again, based what GASB says right now, you just view them separately. So don't try to, especially with the discretely presented component units, you're not going to be really agreeing them, except maybe in year one. Possibly there might be some sort of relationship between them. Okay, let me see. All right, so just a couple more things, then we can get into the examples. So just a kind of a highlight on this, the subsequent measurement. Hopefully, this isn't something that everyone has too much. Again, if there is a remeasurement, I do mention this in one of our examples, is just, change in lease term, change in interest rate, change in payment amounts, pretty common sense here. So just things to kind of consider as we get into year 2 and 3. That you possibly, thank God, have to remeasure. That would be a wonderful thing to do. But that is something. So this is the triggerings that might look at that. So keep that in mind. As you can see here, when lease liability is remeasured, lease assets should be adjusted by the same amount. So that's which is really nice about that. I have the example where we remeasure, and it really is. You're just reducing or increasing the liability in the asset. So once you determine out that amount, it's just boom, boom, very simple, not too hard with that. Same thing on the lessor side, you know what I mean? You remeasure, you just hit the same side. So which makes that really great from a recording standpoint. So, all right. And one other thing that doesn't completely state it, but remember when you are doing these remeasurings is that it takes impact when you actually sign the agreement. So that was one thing that they kind of harped on from the GASB, is you do a lot of talk when this is going to happen, but you don't start adjusting it until actually the agreement is signed and put into place, and then you would adjust your records. Okay, so no new GASB ever doesn't have more disclosure. So obviously they went disclosure, disclosure, disclosure. So kind of looking at this, when I've kind of been looking at it, is I feel like the disclosures for the leases is a combination of the capital assets and like the notes payable, notes receivable. So the first thing is that you will be putting, if you have leases, you will basically, similar to the capital asset roll forward, you will have something just like that for the right to use assets. So, because we're basically pulling them on now is assets for you all. So you're going to have a separate schedule for right to use assets, and then you're going to categorize them. So however, whatever you have, you're going to, so maybe we have copiers, we have ground leases, we have cell phone towers, whatever you're going to do, you're going to have that on there, beginning of the year, addition solutions, blah, blah, blah. Amortization, accumulated. So you have that schedule, that'll be in there. Should be separate from the capital assets. You should not be mixing that, because if you think about what your balance sheet is going to look like, this will be a separate line on your balance sheet. Now again, this is all visualizing. We still have 2 years to change this. This, as of now, is what we're seeing, what we're kind of picturing is going to occur. And then after that, as you can kind of see in here, I'm not going to go reading all this, but just the basic terms. The only thing I heard somebody say about this is that they don't want to give away all their secrets. So keep that in mind. I don't know how for a public housing authority what that would mean, but people were worried if they put all their lease terms, like a vendor would see it and then ask for more, ask for less. But the basis, the terms, conditions. It didn't say you really had to go into like this amount a month, but just depending on what you feel fit for the reader to understand, maybe keep it a little bit more high level versus getting really in the details of it. And then obviously down at the bottom, there's some, some key bullet points if you have any of this, subleases and stuff like that. Okay. So just a couple more things, just kind of looking at, side. I think somebody turned on their volume. You guys can mute in the background. Again, just kind of going into a couple more things. I'm going to kind of go through these a little bit more since I want to get to the examples. So these are just good slides to kind of have, handy. Again, this is on the lessor side, the total amount of inflows of resources. Again, just kind of beefing up these disclosures of what has been recorded. Okay, so this is the last one. I just want to bring somebody's attention because we love new GASBs, but I'm not going to go into detail just because, to be honest with you, I don't know it all yet. But I just wanted to make sure you're aware of this. So 87 does not include computer software or computer hardware. It was scoped out in 87 with the hopes of a new GASB, and the GASB 97 was issued. So just a reminder that, software, hardware is excluded, so not to be thinking of that, or the cloud is not to be considered with 87. You have this to look forward to in June 15, 2022. So they don't give us much time, but you do have this one later. But what I did with my reading, I kind of made that one bullet point, is that you would possibly record a tangible capital asset, depending if you did have software, or excuse me, hardware that you physically had, the intangible asset, which would be the software, and then the subscription liability is the gist of 97. So just keep that in mind to scope that out. I did have a client, a housing authority, ask me about their cloud-based system, and if it went under 87, and it doesn't. But it really looks like it's going to be the same kind of idea. So that's good. We'll have one under our belt. So. All right, so case study. So I'm going to turn this over to Lance for the first case study. We got about 20 minutes left, so let's see what we can get through.
All right, sounds good. Thank you, Mandy. So at this point, you're probably saying, okay, this is a lot of information. How are we going to tackle this? And the short answer is just really one lease at a time. So we got a couple leases here just to kind of walk you through and hopefully put some real application to what you've heard on the previous slides. So kind of our first case study is a cell tower lease, which is something we see. I won't say it's extremely common, but it is something that's fairly common with our housing authorities that they'll be approached by a cell phone company or someone wanting to put a tower up, and they'll have a lease that's very similar to this. So again, kind of going back to your lease determination flow chart that Stephen mentioned earlier, do you have a non-financial asset involved? The answer is yes, because we do have ground space that the cell tower will be sitting on. The next step is really going to be going down and looking at the terms. So what kind of terms do we have? We have a 5-year lease term. They can extend it for 3 successive 5-year terms. Then in addition to that, there is the ability to terminate after that initial renewal term. So if we go to the next slide, some other relevant information that we'll want to need as we take a look at how to account for this. And again, this is on the lessor side. This would be a housing authority that has a cell tower lease. As we'll take a look at their annual rent payments and what do those look like. And so you can see here in this example, the housing authority is going to be receiving lease or lease payments in the amount of $17,570 per year for that 5-year, and then that will increase at a rate of 2% in each subsequent year. If we go to the next slide, it's important to note, so we talked earlier about the right to terminate and how that gets factored in. So the lessee does have the right to terminate based on a couple of different factors or criteria, I should say, including governmental approvals, etc., convenience. And so whenever we keep in mind, anytime that we have that type of cancelable lease, we're going to go back to what is expected or what would we expect to see, and is it reasonable that this lease would continue on? And so as we go to the very next slide, you'll see kind of the results of all the information that obviously we would need in order to be able to record this transaction. The first question is, does this qualify under GASB87? The answer is yes. We do have a non-financial asset. It does have service capacity. It is definitely considered a lease. Only the lessee can cancel for convenience. So again, we are going to record this over the term of the lease. And then lastly, the PHA would record a lease receivable and a deferred inflow of resources. So again, not going to go into the details of all the T accounts that Mandy had mentioned earlier, but this is definitely a lease and something that we would want to record on the books. And so if we go to the next one, ground lease, something that we probably all have on our books in some fashion, or at least or probably have some type of a ground lease that exists with your PHA. So in this case, so we have a 10-year lease payment. You get $100 a year, and there's an upfront payment of $1,415,000. And so again, this is going to be a lessor transaction. And so how do we account for that? So go to the next slide. This one is a bit of a trick question because it really depends on how you're recording it, I should say. But many housing authorities are currently recording a transaction like this as a prepaid ground lease. So they've got some type of prepaid on the books, and there's also the corresponding unearned revenue that would be associated with that. And so underneath GASB87, this is going to be recognized in a very similar fashion, in a very systematic way that we would recognize the revenue related to this prepaid lease. So in most cases, your ground lease payments, assuming you already have those on the books as a prepaid and unearned revenue, are going to end up in a very or have a very similar type of transaction recorded on your books. If you currently don't have these recorded, obviously that's something that you'll want to take a look at. And as a side note, we always recommend anytime you have a ground lease that you go ahead and disclose that in your financial statements as well, just so that it's clear to everyone looking at the financial statements what asset is either being leased or potentially what you may be leasing as well. Just again, so it's really trying to be transparent and make sure everyone's can see what's going on. So, and if we go to the next slide, this is another Q&A. So we'll go ahead and just pose this question out there. Can composite or group methods be used to amortize lease assets? And so I'll explain what that means. So the question is, if we have 10 copiers that, let's say, a PHA is leasing, can we capitalize that and amortize that as one asset and one calculation, if you will, or is it required that we break that up into 10 different assets? So this is we'll call this our intermediate advanced level GASB lease question. So I don't know if anyone wants to dare take a stab at that, whether or not we can use composite or group methods, or do we have to capitalize or amortize those individually? Going once, going twice. I don't see any answers coming in, which is okay. And so this one is also kind of a tricky question. Mandy and I like to debate this one quite a bit as to what the right answer should be. So the more theoretical answer is yes. Government who has similar type leases with, again, similar lives and similar other inputs, meaning discount rate, et cetera, can be amortized as a group and essentially tracked and recorded over time. And so the answer is yes, it is allowable. The bigger question is, and this is the part Mandy and I talk about all the time, is whether or not you actually want to do that. Is that good in practice? And I would say whenever we've worked through these, the pros and cons really are that, one of the pros of grouping it is that you only have one asset track. So instead of having 10 copier leases or 10 IT equipment leases, you have one asset to track. The downside is if at any point in time during that lease term, you end up having one of those copiers that you either need to replace or you no longer need, let's say you shut down a location, so you end up returning it early, or you need to upgrade it. So you had a color or a black and white printer, now you need to upgrade to a color. Then if you end up taking that lease off, then you have to actually reassess and remeasure that group of assets over the remaining term. And so the question becomes, is that easier to do that, or is it easier to have 10 different assets on the books? And so again, Mandy, anything else you'd like to add to that one? That's always a fun one. So
I'm putting it into practice right now. I'm doing some consulting work on GASB87, and I have a client, a housing authority, that has 200 copier leases across all their sites. And so we are really trying to use the group method because it just seems really crazy to, with 200 copier individual leases, like there would have to be software purchased. So then you get to the point where software is expensive. So what makes more sense? And they think that the pain if there was a change. However, there is one caveat that they are planning on buying all their copiers going forward. So these are going to run out in the next like 2 years. So, but I agree with Lance. It just depends on your situation. But just take a look at it. It can work in your favor. However, it could also be, a nightmare going forward. But it is out there. And again, group method, again, similar assets. So similar vehicles. The big example GASB uses the buses. School buses and stuff like that.
Yeah, and just another little pro tip on that as well is that most, if you're going the software route, most software companies will charge you per lease. And so what you have to balance is what is the annual cost per lease versus what it's going to cost either having someone externally remeasure that, because it is a very complex calculation. And so is that going to cost me $1,000 to remeasure it, or, is it, are we going to save less money by just having 10 assets? And so that's really going to be your decision-making criteria there. So.
Okay, so speaking of copiers, just kind of putting it, this is now putting some T accounts in front of y'all. Again, just the copiers looking at least commencement date of January 1st, 2020, which would be the start date of the first year. Full lease price, so this would be over the lease term. What I'd be present valuing is the $52,500. I got 3 years, option for 2 years. Only lessee has the option to cancel. So again, I'm like, all right, we'll do it for 5. The lease actually had a stated interest rate of 6%. And then payment due dates beginning of the month, $750. So just want to kind of see, let me see right here. Just wanted to put it in perspectives just so you could see the entries. So you see that the debit to the right to use asset and the credit to the lease liability. Then we also, you see then, so at the end of the year, or depending on how you do quarterly statements, monthly statements, how you want to do this, you would then do the amortization expense and accumulated amortization. Obviously, just like you do a capital asset, there will be accumulated amortization. And then the recording of the payment of the lease liability. So reducing the lease liability, hitting interest expense, and then crediting cash. So that's kind of like the real simple way, kind of just for the easy ones, I'm doing the list. Let's see. So I'm going to skip through real fast. We only have a couple minutes left, so you guys will receive these slides. So you'll be able to see, I have a vehicle lease in here, which is pretty straightforward. It does do some updated calculations based on revaluing. And then I did a really fun building lease in here for you that's super confusing. But again, trying to throw out everything possibly to you. Again, I have all the journal entries in here, so definitely take a look at these. So what we wanted to get to was the audit time. That's the best time. Want to give you kind of some tricks and secrets. This big training I did out in Washington, actually not far from where this would have been, or excuse me, California. We have a bunch of auditors there, and we were talking all through this. And so your auditors, I would first and foremost, when this starts to come down, have a conversation with them, what their expectations is for the implementation of this lease standard. they're going to want to see a detailed listing of all these leases, the contracts considered. So you're just not going to hand them a pile of here's all my leases that I determined are GASB87 compliant. They're going to use that word completeness. We're like, whoa, what else did you look at to determine? What did you do? How did you figure out this is really all the agency has? So that's just one thing that, you probably want to document or have something put together so you kind of hand this to your auditors. Or if you're working with a consultant, have them put that together for you. As I mentioned before, document written policies and procedures, materiality, the discount rate, any exclusions, based on what you reviewed. I know somebody mentioned earlier, let's start keeping a folder with all your lease agreements, potential contracts. You can start doing that now. Just kind of start working on that to make it easier as you go later. Depending on what you guys determine to do, if you decide to compute your own journal entries, make sure you're reviewing them and maintaining that support, how you guys came up with that. Because your auditors are going to take a sample of this. They're going to look at a sample of your leases and do a recalculation. They're going to see if they agree with the determination that you did. So if you have a policy and procedures, you hand it to them, you hand them your list, what you did, it makes their job a little bit easier, and hopefully, fingers crossed, no kind of findings or anything. As I mentioned, the search for the unrecorded leases. And then lastly, as I mentioned before, just the GASB, FASB differences with LITEX. The LITEX are on, I did write down the dates, a different timeline. They are going to be implementing earlier. So this will, for all of you that have LITEX also, this will be coming up for you to do that also. But there will be a difference between the two. All right, so then the last one, just wanted to kind of show you, was just the lease management software. So again, depending on what you kind of find out and then what your capacity is, what your manpower is, what your abilities are to do this type, you're going to see that there's going to be a lot of complicated leases. Well, there might not be. You might go through and find that you have 5 and you can handle this. But just in the past couple of years, I've been doing seeing a lot of demos, talked to a lot of different clients, and this is just a listing. Here's some names out here. If you're looking for something, there's from the first top 5 are kind of like full software programs, and then others have like spreadsheets. There's other things out there, and then our 5-second shameless plug, CLA does have our own kind of turnkey lease solution that we're doing internally too. That's not a software. We just maintain your lease schedule and pop out the lease schedule, the disclosures, everything you need to do it every year. So again, shameless plug, but I had to put it on there.
And if I could jump in there too, Mandy. Yeah, no, I think one of the things that I know Mandy has seen, and I think we've seen as well, is that one of the challenges whenever you're looking at a solution as to how you're going to just kind of implement this and move forward is that when you talk to the different vendors, and we've been hired to do this, so to basically negotiate between clients and all the different vendors, is that every single vendor has their own pricing model. They also have their own level of service, whether or not they provide GASB lease training, whether they help you identify the leases, or whether they just take the information that you provide and put it in the system, or do you have to put it all in the system? And so there's a lot of different criteria that you have to look at there. And again, just another shameless plug, but Stephen Jarvis actually has a really neat tool that you can actually use to kind of help evaluate software providers, between what one person's using versus what you're getting with someone else. And so and it kind of helps break it down to see what your total cost is of implementing, and also what you would have to do if you chose not to go with a turnkey solution. So I'll post, or I'm sure you guys have it, but if you don't have Stephen's email address, we can post it in the chat so you guys can reach out, and actually if you want to use a copy of that. So go ahead, Mandy, sorry.
Yeah, no, and I was going to say, without naming people out loud, but some places on here, and I don't know if any of you have seen the amounts of these software, but when I started going through this with a client that I'm consulting for, and some of these softwares are like 10,000 to like 30,000 a year. I mean, it is crazy. So I definitely, you know, the one rule of thumb that internally we have a group that helps us out with these consulting. You know, I'm kind of like the client relationship, and then behind the scenes is kind of like our technical people, and they really harp on, if you're going to need a software, you need to just determine the software really early. So I highly recommend you guys are all going through to see what you have out there, and do you need to get to a software? Because if you do, you really need to determine that a good, you know, year in advance. It would be nice. You need time, because you just need time to kind of figure out what's in there and what you need. So very important. Okay, and then last but not least, just again, just the helpful information. Obviously, everyone knows about the GASB87, but the implementation guides, I keep them close to me at all times, just in case, you know, it's more light reading. But they have a lot of good examples in them if you decide to tackle this on your own, kind of some things out there for yourself. So, and that is it from us. You know, right now, if we have any questions, I do have someone asking about the CLA turnkey solutions. If we do the audit, will there be an independence issue? And Lance, no, that was one thing that Walker worked through.
Yeah, that's a really good question. So the answer is, you know, currently underneath Yellow Book rules, it is acceptable that your auditor can assist or even basically perform your capital asset depreciation schedules. Not too many clients take advantage of that, but some do. And so this is really no different than that. The reason that external auditors can be independent with a turnkey solution like this is that ultimately you as the client would be determining, making all judgment calls, and then taking responsibility for the information coming, you know, out of the system. And so, you know, one nice thing about you know, not trying to have a completely, you know, managed in-house enterprise solution is that your costs are really scalable. And so, you know, it can be as, you know, as little as, you know, $500 or $1,000 to kind of have your leases done if you just have a couple of leases, all the way up into, you know, if you've got, you know, again, big enterprise solutions. And I know Mandy was being really coy there, but some of these implementations with some of the larger clients that we've seen, airport authorities and port authorities, can range into the literally hundreds of thousands of dollars. And so it really runs the gamut, and that's ultimately a lot of who a lot of these software providers are geared their solutions towards, are these, you know, much larger organizations where they know, you know, it's going to be, you know, $75,000, $100,000 just for implementation, you know, on the software. So, so yeah, it's definitely something to start taking a look at. If you haven't started looking, definitely start. There are a lot of companies right now that will be glad to talk with you, including CLA. Will be, again, another shameless plug there, but you know, and kind of show you and even help you evaluate, you know, which vendor or solution is right for you.
So thank you everyone. You know, if you have any questions, you know, please feel free. Our information, again, I was told that this presentation will be posted on the PNRC's website. So feel free to reach out to any of us. Even if you just want to talk through what we've seen, I could definitely provide anyone some assistance. Just working with some other clients, be more than happy to. Just let me know.
And if you just haven't got enough,
I think someone needs to mute.
I was just going to say that if you haven't had enough of us yet, on Wednesday at 2 o'clock, we are doing another session on fraud, which won't be nearly as technical, nitty-gritty accounting, but still should be a lot of value and something that we're excited to talk about so that we can kind of pass on some of that information as well. So feel free to come back and join us on Wednesday.
Thank you, everyone.
Thank you, everyone. Bye-bye.